This is Jeff Scott, and welcome to this week's top-down review. I've entitled today Volatility Increases. You know what I mean if you've been in this market. It's been a very difficult market to trade, and I guess times like this reminds me that cash is a position too, and over trading during these times can kill you. Start with a disclaimer. This is for education purposes only. I'm a doctor, not a broker. I am not affiliated with any software vendor or trading company. The tools demonstrated are those that I use in my daily trading. I have paid for all the tools I demonstrate, and trading involves risk, and you alone are solely responsible for any investment decisions you make. Sort of the theme of my educational programs and my webinars is to become your own guru, and by that I mean you need to go out and you need to spend the time and the money to develop your own trading style, your own trading plan, and you can be a researcher and create it yourself, or you can do what I've done and try and learn from some of the masters. I started with the Nucleus and Cancelin. This is the, I think the 4th edition of O'Neill's book, and I've read it multiple times. You can take Cancelin to a higher degree with Morales and Katcher, the O'Neill disciples. They have a book coming out in April about short selling. I follow Woodward and Brown, Ian and Ron here, who have automated some of the Cancelin stuff within highgrowstockinvestor.com software, HGSI as we call it for short, and who have improved, I believe, upon some of O'Neill's work. Alexander Elder, Kerry Lavorne, I find his work, Alexander's work, to be quite valuable, both from a trading psychology, position sizing, and unique indicators such as the force and the impulse, which we'll use those today. My buddy John Person, who I've been a customer of for probably 8 to 10 years, he's been trading since I was in med school, and he's written a number of great books, and I use his indicators, and they're not at HGSI. I've been talking with George and John about how we might change that, but you know, HGSI does a great job of helping me go from a market to a stock. There's a number of setups and triggers built into HGSI, and John has his setups and triggers, which I use within TradeStation, Trade Navigator, and hopefully someday within HGSI. Van Tharp has money management. Thomas Dorsey, who just sold his website and his company to NASDAQ, looks at point and figure charting, but what's important is not how he does his charts to me, but rather how he looks at comparative relative strength, which is what I do. Anna Cooling and dollar analysis, and then my buddy and my partner for our upcoming meeting, George Lee. What I need on my desert isle, besides high-speed internet, I need a real-time charting and trading platform. I use TradeStation, Thinkorswim. Frankly, during the day, I'm using mostly Genesis, and then I go into one of the other two when I make my trades. From a stock market analysis, I'm a big fan of HGSI and EdgeRater. I am a fan with seasonality. You'll notice that the Magenta Trader is in black. I don't have any insight to what's going on except that the program which I love and use, Magenta Trader 3, is no longer working. The servers are down, and there's now a cloud-based version, which no reason not to believe Derek will ultimately be better than Magenta Trader 3, but right now it's pretty basic and doesn't do, frankly, hardly any of the things that I did in Magenta Trader 3. So right now I've made it black, and hopefully it'll be back in white soon, but I would make your own decisions, and I'm no longer stressing how I'm using it because it has to be improved before I'm going to give it that recommendation. Number of websites you can use, and you're probably familiar with those already. Stock patterns are cyclical, and one thing about growth stocks, they may go up like rockets, but they fall like rocks. I always talk about, I want to know where we are, and it certainly felt last week that we're starting on the downward run. We're not there yet, and frankly, I mentioned a few weeks ago, it's like we've had we bisected at the top here, and we keep trading in the small range and go back up. Well, we're at the bottom of the range, which if you're an optimist means we're likely to bounce soon. If you're a pessimist is you need to be concerned. So I'm not going to speculate what's going to happen. I'm going to wait and see what the data shows me. But I'm concerned that, you know, it was a rather volatile week. Now we could bounce here or we could continue going, and my trades will very much depend on what the market does. Thoughts, huge swings in the indexes and stocks and increasing volatility. This is 2 months down in a row. I think it's the second time that's occurred in this bull market that started in '09. Lots of external concerns, so it's time for the bulls, if you're going to survive, to climb that wall of worry. Strong dollar, we saw how it hurt U.S. sales and earnings if you sell overseas, a lot of like Procter & Gamble. Weak euro and Greece has got a lot of people fears. Greece is kind of like my kids. I've loaned them lots of money if I'm the Germans, and the kids decide they don't want to pay me back and they don't want a life of austerity. So it'll be very interesting to see how that's resolved. Ukraine's heating up. Interesting thing in the Wall Street Journal, they had a joint command between Russia and the Ukrainian governments, and the Russian side decided they didn't want to show up for a week. And then, a few days after they made the decision to move their headquarters, the rebels invaded the area. What did they know? Low oil prices, bad for Russia, maybe good for Western Europe. Certainly, it's played havoc in the U.S. with shale companies, ISIS. So lots of reasons for a wall of worry. EPS season continues, and if you had stocks that had earnings, you may have been rewarded for blowouts, i.e. Netflix and Apple, but my goodness, even good earnings, think, for example, Skyworks initially sold off. What is working is narrowing REITs and refiners and MLPs. I've got them in yellow because their stock patterns look like they're getting under more pressure. Utilities, Apple and component manufacturers look good, but the winners are clearly narrowing. I had a few comments about my seasonality. Netflix was a grand slam home run. Paraxel has not yet worked. Now, I bought I say debit spread, so I paid money on my calls, and my in the money calls is still at the money. The out of the money calls are pretty much worthless. So the ones that I sold, I bought back. And since they're dated in March, and since we're in the midst of the Paraxel earnings seasonality, I'm going to hold on to my in the money calls, which I have a lower acquisition price because of the out of the money calls, which I had sold, which I've now gotten rid of. This is Priceline. Priceline reminds me a lot of Netflix. It reminds me of Netflix for a couple of reasons. And by the way, this is the new magenta screen. And, there's a potentially a new algorithm for the seasonality. That's a big improvement. And Derek has certainly promised that all the things that we're used to and feature-wise, including the calendar, will be up in the next week or two. I would say to keep an eye on it because those are critical in my mind. So a couple of things here. Like Netflix, Priceline has been in a downtrend, but it looks, and similar to Netflix, it looks like over the last 10 trading periods or so, it's stabilized. Now, in the old version of Magenta, I would have drawn a new trend line just looking at from this up with these swing low, high, low, and we probably see that the from this short period of time, the linear regression's probably turned up. Like Priceline, like Netflix, it has a 20% plus return. Starting on February 2nd is these numbers here. You could see out of the last 10 years, it's been up 9 out of 10 years. Last year it was up 11.5%. The 1 year it was down, it was only down 1.48% looking out over the next 30 days. So I look at this and I see I'm interested. Now, Priceline, similar to Netflix, has some really expensive call options. And similar to the Netflix story, I'm very concerned about the market, and that makes me less bullish on any trades here. And I think the one thing I've learned from John Person is that technicals trump seasonality. So how am I going to play this? I will probably wait to the day of earnings. I think they're a week from now. You need to do your own homework. And what I'm likely to do is just sell premium and start looking at maybe doing some credit put spreads where I will sell, say, like a 980, 990 put if it was today, and buy back a put $10 or $15 below. And that way I'm limiting my downside risk, a high probability trade, and maybe I'll get $6 of the move. Now, I could buy calls and project it going up. I could do a call spread that would lower some of my risk. I could also look at perhaps a call that's $10 out of the money, or excuse me, 10% out of the money, which in the case of Priceline is a long way. And if I'm looking for a 20% return, I can buy a low delta call and hope it goes up with the price increase. So there's a number of things I could do at $1,000 a share. I don't care how much money you have, it's going to be very difficult to go out and buy a large amount of shares. So I'm going to look at options, but I'm going to be careful because I'm concerned about the market. Final call. I've got 2 or 3 seats left for the upcoming summit. Just the basics. It's in Palm Beach County. It's George Lee and I and John Person. John's going to speak for 2 hours on high probability indicators, specifically the ones that I've incorporated into my trading. We're going to try and stay on target on this. As you can see here, it's 3 days long, the meeting. There's meals. Software will be given out, anything that we use, any customization. Chris White from EdgeRater will be there as well. And hgsi.gmail.com, $800 for 3 days. I'm not breaking it out into 1 day at a time because the agenda is not designed to do that. And there will be breakout sessions. So not only do we hope to teach you more about how to trade, when to trade, why to trade, where to trade, and what to trade, but we'll try and help you develop your own scans on your computers with your own software. Week ahead, anything to care about? Well, here is some of the news, and obviously first Friday of February, we've got employment numbers on Friday morning. That'll probably be the big mover. Claims fell last month, which was a surprise last week. You can also see the Challenger numbers, ADP numbers that come out on Thursday might be moving. You got some factors in construction, ISM index, and some spending. Perhaps even more important is on the right-hand side. And you got to know when your earnings are. George has done a couple with an HGSI recent updates that I think helps that a lot, but you and you alone are responsible. Don't get burned. It's okay to make a mistake and hold during earnings and lose money. It's not okay if that happens and you didn't even know it was earnings. You need to make a decision. Not all of our decisions are going to be right. Let's take a look at some charts and get an understanding of what the market's going to do. First thing I'm going to do is I'm going to jump into my Genesis screen. And I showed you this once before. I want to show it to you again. So what I have here are the E-minis, the NQs. For whatever reason, RUT is expensive, so I don't even buy RUT. So this is the IWM here in Genesis, the NYAs, and the YMs. And I'm looking at a 60-minute chart, I believe, here, a daily and a weekly. These are momentum changes that are automated within the person indicators. And what I'm looking for are essentially sells and buys, although they're really momentum changes. But what I've noticed here is that on Wednesday, we went to a sell conditions in my vernacular. John would probably say momentum to the downside. And we did that on the E-minis, the NASDAQs, the Russell, the NYSE, and the Dow minis. Russell has held up more and went negative on Friday. We were also on weekly sells on all of them. So we have to be concerned about the market. I'm a top-down guy. This market is toast right now, and I've got to be convinced to go to the long side. Now, what's neat about Genesis Trade Navigator is, and this is just a chart that I use, and these are some pivots for support and resistance. These are John's moving averages on the pivot moving averages. This is a 200-day moving average and a 50 in the red and the blue. And you can also plot things like advanced decline on the S&P, and you can see it's turned down. Other thing that's bothersome is if you look at, see what I'm looking for. You look at on-balance volume is going down, AD is going down. It's no surprise that the market's going down. So I'm very concerned about this market. The other thing I like about Trade Navigator, frankly, when I look at the other thing I like a lot about this. I shouldn't say the other thing I like, is I scan stocks, and this is something that I like to be able to do in HGSI. And those of you that have Thinkorswim can do it within Thinkorswim to some extent, is I can actually scan a universe looking for long signals and short. And you could see on my universe, which is probably 2.5 and 150,000, there's only 84 stocks giving a daily buy. And that doesn't mean a daily buy today. That means they're in buy conditions from whenever the buy fell. And on the daily shorts, oops, that's weekly and daily shorts. That's both. That's not what I want. Come on. Well, actually, somehow, I guess it didn't come through. There's daily short. We have 524. So that's 524 to the dark side and 84 up. If I look at stocks that are long on the weekly, I'm down to, I've got 84 dailies. I have 81 weeklies, and I have a small number that are going both ways. A couple things about these. Several of these showed up on my screens. CGI, Celadon Group, is a trucker that looks pretty good, and I can click here, and you could see some of our traditional indicators with the moving averages. What I like about Trade Navigator is right over here. And this shows me, you notice the price with that green arrow where my vertical line is. You notice that this orange here keeps going. It's projecting based upon past history seasonality. So this is what I may need to be relying upon for seasonality right now. And it has a scanner built in as well. So if I look at Priceline, just for the curiosity here, I can see, and this is just a short-term daily and a weekly, that I'm in downtrends. And so I'm not that excited to jump in and start buying or shorting or buying or selling premium to the downside until I get probably at least a daily buy signal. But you notice over here that you can see the strong seasonality going forward. So I kind of like the fact that it's plotting it directly on a chart and is a true forward-looking indicator. So let's jump into my trade station very quickly and look at my elder indicators. Sometimes try that again. There we go. And let's go into elder. So last week I was concerned because even though we had a daily buy, we were in a weekly sell. Let's take a look at this week. What do we find? We find that we're red, so we're daily. And again, we back up. These are not, again, like I said with person, these may not be truly buy and sell indicators. When the impulse indicator, which is the color of the bar with Elder's indicator, is red, he has permission or grants permission. It grants me permission to short or hold, but not to go long. When it's green, it grants me permission to go long or hold. And when it's blue, it's not giving me a signal and allows me to have the flexibility of long, short, or hold. So if I look at the daily, the NASDAQ, it's red. The weekly, it's red. So clearly the NASDAQ, at least on the composite, is to the downside for both daily and weekly. On the longer term monthly, it's blue. You notice these little red dots that are right at the top of the bars there, and you can see these red dots in here. These are MACD divergences, and typically we sell off after we get a bunch of them, and we have. This blue dot and this magenta dot are person buy and sell signals. And so we're on a person sell signal as well on the NASDAQ. If I look at the Dow, red, red, and blue signals are the same, also on a person sell. If I look at the Russell, red, red, and blue. Over and over again, we're seeing the same pattern, which is that we're in a sell signal. Now, I just wanted to show you what these MACD divergence dots are signifying. They're signifying that even though where my arrowhead is, we had a higher high on the Russell, we did not get a higher high compared to the last higher high on the MACD. These are the lines, and that signals that perhaps less pressure pushing this move up, and hence we get the MACD divergence. So I don't need to even look at the MACD because these little dots tell me it's there. If I look at the S&P 500, look at the SPX, red, red, and blue. So any way I slice this or dice this, this is a market that is pointing to the downside. So our question or our goal should be, as we look into the HGSI charts in a few minutes, is can we do better at predicting important support areas and be able to look to jump back in long if we hold and bounce off support. A few other things, I like to do a group performance analysis where I've got a number of different watch lists that I track. This is a function built into HGSI. So the first thing I look at is I've got a couple of things that were long, but the vast majority of my groups did negative performance for this week. Positive in black, negative in red. I look at the S&P 500 and it's way down here at minus 2.77. Now, growth stocks actually did better this week. IBD 50 was down 1.25. My stuff that I owned at least a week ago, which I don't necessarily own anymore, were down a little bit less than that, 1.19. HGS 100 was down about 0.5%. So our stocks actually outperformed, but they outperformed a really bad number and still were negative for the most part. No Hindenburg yet, but we flew 3 out of the 4. And the one that hasn't fired is the rising moving average. And I still question whether we're following the right one. I point out 6.29 new highs and 3.18 new lows. So new highs have come down and new lows have moved up off the bottom. Bucketology, we've now shifted further to the left. 66% of stocks in the S&P 1500 are trading below their mid-band. And as you can notice here, 10% have now gotten down below. Not quite a reversal number, but showing some of the pain that you might be seeing. If I want to see what bad looks like, this is from January. I did it again with the same one popped in here. This is from January 15th, where over 20% of the stocks in the S&P 500, 1500 rather, were trading below the midline. And if I ran it, let me fix this. I run it real quickly. Buckets report in the S&P 1500 with data. You know what? I haven't updated this one, so it's not going to give me the date. So I'm just going to punt on that, except I think I want to go back further here. I have too many computers, so sometimes I update one and not the other. Just trying to show you this is what a very bullish period looks like. Where I now with 13% of stocks above the mid-band. So I forgot. Let's turn that off. All right. The markets in EdgeRater, really look at is over here, which is the Woody indicator. And you can see we're starting to show red, which is bearish. And you can see over here we had a whole series of kahunas come in to the downside on Friday in the major indices. And this one here, which is the IUX, certainly did the worst on Friday with a big kahuna to the downside. look at some seasonality real quick. I mentioned Priceline. If we look at this column over here, which is 1 month performance, you can see over the next month it's up 12 out of 12 years, Carlisle 11 out of 12, Matrix 11 out of 12, and so on and so forth. And this is obviously a scan and edge rater. And if we look over here, I can see performance over 1 week. Whoops, don't want to do that either. Over 1 month rather. And ignore anything with small numbers. It's not enough history. I want at least 10 years threshold. Pharmaceuticals up 35%, 8 out of 10. That's a big number, but it's only 8 out of 10. Here's Matrix Services up 16%, 11 out of 12 years up. And here's Priceline up 14% over the next month. So a lot of supported evidence that Priceline outperforms now. And here's another one that I like, OmniVision Technologies, which is an Apple component play, up 11 out of 12 years, or a 12% return from today. So I look at seasonality. Even though the market is tough, there are some stocks that have favorable seasonality, but I think I've said it twice already. Technical analysis trumps seasonality. Now, let's go into HGSI and do some scanning or some analysis to understand what the market is doing. So I'm going to start in my Major Markets Plus, which is the Woodward and Brown Group, and I'm going to go. First, I'm going to make a quick advertisement. Many of us benefit from the work of Ian and Ron and Woodward and Brown Investing. When I say Woodward and Brown user groups, smart groups, they're providing those at no charge to us. They make their money through selling some products. Ron Brown has a daily report, OneNote report. But where they really, I think, is important to show them support and love, frankly, is in their seminars. And they also have one coming up. It's $1,275. I will be there. George will probably be there March 28th through 30th. They're great meetings. You'll come home with a new network of friends and a new understanding of the program and how to make money trading. So highly recommend them. That's a great way to thank them and give back for what they do for us. So I look at a top-down review, which is pure price and volume, heavily weighted for the last day, and then a little bit for 5 days and a teeny bit for 3 weeks because it looks at 13-day force. And what do we see? The strength over that period of time, TLT, so interest down, bonds up, gold, oil, commodities actually spruced up this week. What's weak? The bad news where we live, the Russell 2000, mid caps, small caps, Dow stocks, S&P 1500 are all middle of the road and below. So that's never good for stocks. If I look at 1 day performance, volatility bounced up 11.8% on Friday. Gold was up 2.2%. Utilities were down 2.3%. Transport's down 2.3%. Russell was down 2%. And we'll come back to some of those. Let's take a look at some of these indexes and see if we can get a sense of where we're going and when we should be thinking about going in the market, perhaps, or more reasons to stay out of the market. Now, just to give you an idea of how much volatility this market has, on Thursday, so we're talking 2 trading days ago, during the day, Gil Morales and Chris Katcher did an excellent webinar, and the webinar was quite bearish. And then the market turned around, we thought, and so Gil came back Thursday night and did a stock hunting webinar and sort of said the market's changed. And then I think it's time for another shorting webinar. But basically, if I go to a weekly view, on the S&P 500. And just looking here, I wanted to point out we had the kahuna to the downside, no phoenixes. Now let me go to a much cleaner chart for you. In all my charts, the green is a 17-day simple, the blue is a 50-day simple, and the red is a 200-day simple moving average. The magenta is an 8-day exponential moving average. I like candlesticks, and there's no volume on the S&P 500. There is no Hindi. You can see the last within the platform Hindi going back a little bit. So let me push this back up. We don't need to worry about that. Okay. So I didn't just do this today. I did this back here and have been saying that we are in a trading range that goes back since to the middle of December. Interesting that the bottom of the trading range is right on the 200-day moving average, and that the top of the trading range is way up here where we peaked, I think, on the 29th or so of December. A trading range is a trading range. Now, what I need to know, what you need to know as traders, is what are we going to do from here? Are we likely to go like this? Well, black swans happen when you don't expect them. So my answer is probably not. Are we likely to go to this? Probably not. So I think what we're likely to do, and I'll switch that color to red, is I think this is too compelling down here where I've got support in the 200-day. I think it's so compelling that we're going to go down and test it. And I'm looking for this. Now, this could happen even before the market opens, the way it's been trading. Let's just pull this data business up here, put it over here, and I could see that we closed at 1994, and the 200-day moving at is 1974. That's only 20 handles on the S&P. So it wouldn't surprise me for us to do that even before the market opens on Monday. And then what we'll have to see is now, and this is when it will get interesting, excuse my doodling, because my guess will be that we will then do this and then someplace else do this, hold it, and then we're probably going to go back up. That's what I expect to see based upon my experience. The bearish argument would be that we break through, we come back here and fail a retest and go back down. So I have no idea. I also am a lousy drawer. But the bottom line is you need to put your lines in the sand. So I'll tell you what my lines are. What would disprove my hypothesis? Simple. I take out the highs of Friday. Okay. And that would tell me that my hypothesis that we're heading down may not be correct. So I'm not thinking about anything long until I take out Friday's high. If I'm correct, I'm going to start thinking about long when I get down and retest my support and look for not necessarily the first bounce as much as I'll look for the retest of support, and then that's when I want to start going long on that side. On the other hand, since this is such a compelling bounce area, do I really want to go short my entire portfolio when there's a good chance we bounce in 24 points? No. So from the downside, I'm going to be looking for when we penetrate this area, go back and test. And if I fail that test, boy, I have nothing long left in my portfolio and I'm going to be really short. So I've got to see what happens then before I'm willing to make any more commitment, long or short, is what's going to happen in here. And that's how I'm going to play it. I'm going to watch the indices, and I'm going to probably continue to lighten up positions, but not make any major move until I declare whether we moved above, and maybe it's okay to buy, or we've broken down below. So that's how I'm going to play this market. But the key word is I'm going to play it very carefully. Just to quickly look at others, the NASDAQ Composite, similar story. You can draw your lines wherever you want to draw them in the same games play. A little bit stronger, way above the 200-day moving average. From here, a pullback to the 200-day moving average would be another 3.3%. It's not that far away, but it certainly looks a lot better than the S&P. If I look at the Dow, here's the top, here's the bottom, same story, right at the 200-day moving average. I mean, that 200-day moving average is going to, I just think it's going to be a magnet. And the question is whether we break it here as we did back here, or if we go further back, do we pull one of these, hold, and go up from there, which I think is a possibility. So I've got to see what happens in this trading range, and then I'll take a look quickly at the Russell 2000. Man, I feel like a broken record. Somewhere in there is your trading range. Here's your 200-day moving average. How compelling is it to go back down there? I think we have a retest. Retest is good. Retest bounce. I get excited. And then a retest back at the 50 and move further forward. That would be a very nice sign in my mind. We'll see what happens. But more importantly, I'm not saying what's going to happen. I'm saying what I'm looking, how I'm going to play it. And I'm like, I need more. The CSI of stock investing needs more information. If I look at the VIX, rising VIX is bad for owning stocks, and this is the VIX that's in a rise. So I need to see where that's at. I'm long the VXX right now, but I'd love to sell them because that would mean the market's turned around. Gold. All right, so remember, this is very similar to what I want to see the stock market do. It's different because it's coming from below the 200, but boy, I couldn't draw this better. I want to see, what makes me a believer is when we break above resistance, pull back to that resistance, pretty much holding. We had some intraday movement below, but we closed right at it, and we're off again. To me, that is exciting. So gold looks good. In fact, if you were smart enough, which would make you smarter than me, and went to JNUG back here, I don't look that smart. Guess you know what? It has moved a lot, even though it doesn't look like it's moved a lot. So let me make that bigger. And had you gone into JNUG at the low on Thursday and we're still holding, you'd be up 20% in one day. So we had a big move on gold this week. Looking at silver. I know it's in here somewhere. You're all saying, there it is, there it is. Let me give us some more space. Silver failed the 200 here. I like gold much better. silver is going to have to get above and come back. That's not to say that gold miners and silver miners look the same or may not look better than the gold. See, the gold's already up to 200. I like gold right now better than silver. And then let's look at oil. Bottom. Big volume reversal on Friday. Out of curiosity, it got a person's buy signal daily on Friday, not a weekly. Look at the seasonality for oil. Oil perks up in February. This is interesting, isn't it? Oil's in a severe downtrend, and we're about to go into a period of strong seasonality. So that might be why airlines sold off so much this week on Friday. It was Hawaiian Airlines had some bad numbers, may have been the real reason. But oil seasonality looks interesting. That is in the setting of bad on balance volume, although perhaps it too is trying to turn around. So oil might be interesting. There's a lot of stocks that have this chart, by the way. BCEI is one that showed up on my screens. All right, so that's the market. I think you could see what I think, which is market's clearly under pressure. I'd like to see a pull to support, bounce, retest, and take off. I'm not jumping in long on Friday until it takes out yesterday's high. Now, if it goes and bounces off support at the 200, you can ignore my prior statement because I'll be looking to go long at that point. A retest of support is when I'd probably open up my wallet a lot bigger. If I look at industry groups, 176 in HGSI, I could see 6 of them were positive on Friday. Over the week, really no different. 5 of them. It's really the same ones. I think the only thing that was different here is maybe the refiners. They all look the same. Maybe the services. We'll go look at these in a second. To the downside, 64 led by renewable energy, specialty chemicals, mortgage finances, more chemicals, investment management, containers, my old friend biotech. If I look at over 5 days down, 86 groups. So we are clearly, services went out of the 5 days down. They had a big move at the end of last week, and they're in the 2 days up. So be very careful to the long side. If I want to look at what's working the best, let's look at that 2 days up, and let's take a quick look. No surprise, precious metals are up because we looked at gold and to some extent silver. And let's take a look at some of these stocks. So I've added my daily bongos, and somewhere in there are my weekly bongos. Come on, show me my weekly bongos. Oh, I'm going to be mean to me here. All right, let me close this up. All right. Oh my, well, maybe it should be above it. So many switches of resolution in my monitors, I now can't even open up my weekly bongos. All right, I'll fix that. I've got it working on my other computer without a problem. All right, so daily bongos, forces, accumulation, distribution. I got my high jump bar, looking for Bible gap ups, squeezes, mobile breakouts, Kunis, Phoenixes, pocket pickets, the rest. So what do we have here? So we'll just start taking a look at these, and I'm not going to, oh my God, That's killing me. Oh, that's funny. All right, whatever. Sorry for that. So I got my group strength on gold here. Bottom moving up, 200 days moving average, nice uptrend. This is Ashanti Gold, and this is AU. Core mining, CDE. It's going to have to get above that 200-day strong group movement. Good OBV. Moving up, everything is green. Mobile breakout on Friday looks good as well. First Majestic Silver pulled back a little bit. I think, again, gold looks better than silver, but this is clearly in an uptrend as well. Franco Nevada Core has broken above the 200. Kind of ugly here, not doing much. Although it did come back and get close to retesting and took off again. Got a PSAR sell, probably would pass on that one. PAAS, Pan American Silver, another gold company, silver company rather. Here's Silver Standard Resources turned away at the 200. So I like the gold ones better. I'm into this one. I have some gold fields. This is what you want, frankly. Big breakout, pull back to support, taken off again. Mobile breakout, everything is green. Mobile, OBV heading up, bigger volume on Friday. It's not going to go high on a force ranking because it's lower volume, which will, I own some Seabridge Gold. Kind of looks like the Franco Nevada. Notice how it went up, tested the 200, went up again. Kind of not so nice here the last couple of days. Let's take a look at GG and American Barracks. American Barracks, nice uptrend here. Still going to have to get through this 200-day moving average. And Gold Core, poking above the 200. So if it can hold there, go up, that might be a nice buy point. Here's Rand Gold, kind of like my gold fields, got up in a nice uptrend. So gold stocks look good and might be one of the best things that we've got running right now. So it's back. Exploration and production. You're going to see the same pattern over and over again. EP Energy, downtrend, broke above the 50-day moving average, had a kahuna, everything's here, mobile breakout. And let's open up earnings, makes money, and has growing. So this is not a giant stock. It must be an IPO. It doesn't have a lot of history. So the problem is with all of these, they're in a pretty nasty downtrend. And, they've tested that here and they failed. They've tested the 8-week and they failed. So is it different this time? So that's why I'm not going all in on these, because this is a perfect shorting position if the stock fails. Now, I'm not shorting a $10 stock. So I'd like to see it get above. Again, just like that index. Nothing would make me happier than to see the stock trade up here, come back to that 50 and retest, and then move back up. And in fact, when I look for my favorite trade, that's what I'm looking for. Broke up, pulled back, tested, and held, and went again. So this is nice. I would call this a bottom fisher, bottom feeding, because it's down on the bottom, but it's got some momentum coming in, and you'll see a number of those patterns as I look forward. Baytex, same pattern, below the 50 though. Here is Bonanza Creek. Maybe I like this one better because it's gotten above the 50 and it's sort of held there. OBV is up, had a kahuna, mobile breakout from a squeeze. Everything that I can see there is green. Now, if I look at this on the person, this is one that came up on, whoops, don't want to do that, cancel. So you can see, I don't know what I did to the candlesticks. Let me fix that real quick. Pages. No. because I could have just loaded the same one. Now let me go back pages. The other thing that's really cool about this is I could update one of my charts or my spaces, or John can, and if you have the same program at home, then you have the ability to then download exactly what I'm looking at and have it on your computer. So here's BCIA. So you can see it's been in a daily gold since the 23rd, weekly since the 9th. So it's bottomed, it's heading up. You see the seasonality is strong. It's bottom fishing, but it has broken above the 200. Really has had a nice sideways move here. I like BCEI. Whiting looks very much the same, but hasn't yet got above the 50. And I think I'd put Whiting into this category as well. Very similar. So those are a couple of ideas on the oil. You could go down the list if you wanted to. There's others that looked interesting as well. Be careful. These could be whipsaw, and these could just be setting up for shorts, though. Oil services. Neighbors is going to be acquired by Halliburton. Not Neighbors. Yeah, I think Neighbors. No, not Neighbors. I'm sorry. One of the other ones. Now I'm confused as to which one is. I don't believe it's Neighbors. But just like the oil plays, it's sort of basing down here. Had a kahuna come in Friday. OBV is turned up. Makes money, has earnings coming into the stock, is pulled way off its highs, has a 2% dividend. These are all very speculative because they all are in downtrends. And you can see in a downtrend, stocks have a tendency of failing at moving averages. CJES, CJ Services, great earnings per share growth, crappy looking chart. Patterson looks like it's bottomed, had a kahuna, broke above the 50. Everything is green. It too makes money. It pays a dividend of 2.3%. The big kahunas in this group are Schlumberger and Halliburton. Baker Hughes is one that Halliburton's buying, I'm sorry. And where are they? Not doing much below the 50. This is Schlumberger, and this is Halliburton. But basic, maybe setting up opportune times to get in, because I know Halliburton well, and you're at a level that really takes you back to 2012, 2013. It gave up its entire 2-year gain, and it had a very nice run. Halliburton. All right, back. Next group down is midstream. So these are tollways for energy, and they take out a percent on everything that goes through. They pay, as MLPs like REITs, pay most of their earnings as a dividend. Here's Newstar, pullback to support, sort of a double bottom there. Some pocket pivots and kahunas breaking up, have to get above the 200. Everything is red. What I liked about Newstar is it pays a 5.8% dividend. So this is NSH. Are these done going down? I don't know, but they might be done going down for right now. And like the other energy plays in seasonally strong period, looks pretty good, doesn't it? NSH, ETE, doesn't look as exciting to me. Newstar, look at this great earnings per share growth, pays a 7.2% dividend. Remember, they only pay dividends if they have the revenue to support it. So the midstreams, now you see they've all sold off, which is why I said that the refiners and the MLPs look good, but they've been under some pressure. Let's go back to the next upside group. Here are the refiners. Now I know why things are screwy. I'm not ranking by raw. Dummy. All right. This first one on the list is Marathon Petroleum. This is not a tight chart, but if it's sort of just like the indices in a range, it's moving up here. It would have been nice to have bought it after this bingo down here. Everything is green. Marathon Petroleum, it pays a 2.2% dividend. Valero had some good numbers, broke above the 200, technically looks stronger. Notice how it broke up, tested and held and traded up on Friday. OBV is turned up, everything is green. and Valero pays a 2.1% dividend. Holly Frontier, way under the 50, starting to move up. I'd like to see it be above the 50 and more technically sound. Tesoro Petroleum failed the 50 here, got back above it. Looks a nice uptrend, great earnings per share growth coming in, multiple of 14.83, pays a 1.5 dividend. TSO looks really good here. And let's just see what I got here, TSO. And you could see the seasonality. We're in a strong seasonality for this stock as well. Fired a weekly signal on the 23rd. All right, see if there's anything else. Next group over. Now, one could argue, and John makes, I think, a great argument, that there must be demand because these guys often own gas stations and refiners, and if the price of oil goes up or down, may have a differential impact on them. But if utilization goes down, then that's a bigger problem, and these would suggest that utilization is not down. And then the last one was agricultural chemicals, and I saw Mosaic maybe 2 weeks ago. Let's see what these guys are doing. In the cyclics, we'll go to Genesis, look at the seasonality as well. I spotted it up here when it broke above the 200. It's gone sideways, wants to run again, had a mobile breakout and a pocket pivot on good volume. Everything's green on Friday. This looks very compelling. See what it looks like on a weekly chart. That might kill my attitude. Weekly chart, not nearly as exciting, but if I run up to 54, that's a 10% move. It's got earnings coming into the stock. We'll take a look at it in a second on Genesis. Potash, similar pattern. Agrium, even nicer. Had a nice move off the bottom here. Mobile breakout, everything is green. OBV turned up. Big earnings coming in, and pays a 2.6%. So just curiosity. So you look at Mosaic, had a buy signal on Friday on the daily. It's in a buy signal on the weekly. Seasonality, it's still positive, at least for the next month. Potash, seasonality doesn't look as good, but the stock's in a nice uptrend, at least short term. And then if I look at Agrium, as I look at these, I think the winner is the one that came out. I hate when I change things I'm not supposed to do. You go back and just reload this. Okay. I think the winner here is Mosaic. And it will be added to my buy list. So this is what I do in top down. I go through the leading groups and try and find the leading stocks in the leading groups. So very quickly, let's look at the downside, specifically at biotech. Biotech is one of my strong suits, and I know that John's become very bearish on this. Lot of mixture of big and small companies here. One reason to be bearish on biotech is if this market rolls over. Look at the move on, this is Celgene, from back here in June of 2012 at less than 32 bucks. 3 years later, the stock is at $124, $122, whatever it's at. Just seems a bit in a major uptrend. You could see on Friday that Celgene, like many others, sold off pretty hard on fair value with a pocket pickup to the downside. That's worrisome short term. Bluebird, perhaps it's putting in a bottom here and maybe will reverse, but it's at least got a bull flag. We'll see if it breaks down or if it holds above the 8-day. BioMarin, all these shooting stars are bothersome, topping type patterns. Syngenta, again, a bearish Harami, pocket pivot to the downside, OBV rolling over. So these are some very strong stocks. Let's just look at the IBB, the ETF, and you get an idea of how strong. Now, these were all weekly charts that I've been looking at, and I've been finding that these weekly charts are sometimes much more useful. Here's a weekly IBB, and you could see that it really only had a long-legged doji here. And I'll be looking to see if we can get a low close doji, which would mean a big red bar that comes in. This is what will worry me on my biotech. A red bar to the downside, kind of like what we saw here and here, would be a low close doji and could lead a pretty substantial 10-15% pullback in the IBB. Go back into here and look at it. And you could see it did get a sell signal or momentum change to the downside signal on Friday. It's still in a weekly uptrend. You can see seasonality here to the right of my vertical cursor going down, so you might want to be careful on some of your biotechs. Just a couple more things before I say goodbye. If I go into all securities, see if anything had some unusual volume. Let's look at 5x volume. Wow, a lot of things. Don't want to go through all those. Let's look at a couple real quick. These are stocks exhibiting 5 times their average volume on Friday. Now, in a bull market, these would all be going up. You want to bet that that may not be the case. Core medics, healthcare, and pharma doesn't make money. Let me give you some more data here. Been around for a while. I've never heard of it. Big gap up 2 days in a row. Mobile breakup from a squeeze. OBV going high. Big volume. $3 stock might be something to look at to see what's going on. Immunogen. Off the bottom with a kahuna, big volume day, mobile breakout from the squeeze, doesn't make money. Check the news. Gigamon used to be a high flyer. In fact, if we look at a weekly, you can see it used to be almost a $40 stock. On a weekly, it looks like it's setting up to run again. On the daily, we had a viable gap up on a stock uptrend, pullback, semi-retested on the 200, certainly retested on the 50. And had a Bible gap up. That looks interesting. Doesn't make money, which I don't like, but I like that pattern. Core U.S. Treasury genetic technologies below the 200, cheap stock. So I look at these high volume charts to see if I see something that looks compelling. These are all stocks with more than 5 times normal volume. All right. See if anything pops up on the sprinters that we haven't already talked about. In fact, notice what made the sprinters. So we have 157 stocks. Let's break them up by industry groups. Oh, where is it? I have so many stocks, I can't always find what I'm looking for. I don't see it there. Is it? All right. So you can see that on the sprinters, 31% are in REITs. That's not what I wanted to do. Pull this up here. Semiconductors, specialty pharma. So these are some of the leading stocks And these are the groups where those leading stocks are. Restaurants, let's take a look at FIG. I had talked about this a few weeks ago, and it hasn't made its move yet, but I wonder if FIG, I think it's called FIG, Fiesta Group, let's take a look at it. It had good seasonality. The stock has been going sideways. I think it's in my buy list. I see a stock that's squeezing here. It's gone sideways, has good earnings coming into the stock and a strong industry, which is Fiesta Restaurant Group. Now, I'm not saying to go out and buy it, FRGI, but if it breaks out from here and the market is strong, I'm going to be watching it. It's on a weekly buy. I've got to see something happen. It's not doing enough for me. So last couple of weeks, I've been quickly going through my buy list. Let me do that today and very quickly. Acorn is a leading biotech and pharma stock, lower left, upper right. It's gotten loose up here. In fact, I'm going to look at weekly charts this time. Nice doji here. I'd like to see what it does this week. Allegheny Technologies has pulled back. This would be a bottom fishing stock. Putting in a bottom here. They make the steel that goes in airplanes, the alloys, great earnings coming into the stock. Why am I interested in them? Because I know Boeing had a recent breakout. And if Boeing is doing well, then this is a component maker for Boeing. Ambarella, not now. I'm waiting for it to pull back to the 50. You notice it's bounced at the 50 each time in the past, so it's getting close to that point, the component maker for GoPro. ANIP, kind of going sideways. Looked like it was breaking out of a wedge here. Had some pocket pivots last week, but sold off some on Friday. Watching it, great earnings per share growth. It's a biotech. Berry Plastics, uptrend, had a bell-tolled reversal on the 50, closed up. This is mobile breakout from a squeeze, Kahuna pocket pivot. Don't know much about this. I thought they used to be an oil company. Maybe they just, same name, BERY. Notice what it had was a buy signal, was in a weekly buy. And from a seasonality perspective, it's not old enough to give us any seasonality. I like this pattern a lot because you know you got pretty good evidence that you're not dropping below here. So this is one of my I can set it and forget it trades. This is a trade where if I was getting on a plane tomorrow and couldn't watch, I would set a buy right above that PSAR. And why I would set it there is simple. The stock trades up tomorrow because the market opens up. It's going to take out its PSAR, which is going to give a buy signal to people that follow PSAR. I'm going to set my stop. I could set it at the 50. I might set it at the bottom of the wick here. And so if this stock trades up and takes out the high, I want to be long. If I go long, I want to immediately put in a stop here. Now, that's a long bar. That's the only thing that I don't like about this. And if it trades below, I don't want to be in the stock. And the market opens down and this gap's down, I won't get taken out because I'm not going to trade above the PSAR dot. So these are kind of auto trades that I do because I can get on a plane and it happens for me automatically. Biogen breaking out to new highs. This is a great biotech, certainly one of the bellwethers in the orphan drugs. If biotech is strong, it's going to be hard for biotech to get killed. Bank of the Internet holdings, maybe trying to break out here. Everything was green. I liked its earnings. Here's Bonanza Creek. We looked at already. Broadcom. It's kind of like the one I worked up already, where it had a pretty big bar on Friday, traded down, stopped at the 50 on a mobile breaker from squeeze, pocket pivot in Kahuna. I'm going to have to see this stock trade above the 50 and hold before I'm interested, but it made my watch list. Brunswick Corporation tried breaking out on earnings, I believe, on Thursday. Look at the numbers coming into this stock. Big doji on Friday. Needs to get above that PSAR dot in the high of Thursday before I'm interested. Celadon, this is one of the rare truckers that wasn't on my short list. And it's been in a slow, steady uptrend. This is a weekly chart going back to 2012. And Celadon CGI did get favorable, notice here, buy and a weekly buy. So it's both a daily and a weekly buy on my Genesis. Seasonality, a little bit positive, but really mostly neutral. EPAM, putting in a saucer pan bottom. Pocket pivot, kahuna, mostly green above. I got my Bongo Weekly back. Look at that. All right. EPAM I just looked at. Fiesta I looked at. Freescale, probably the best of or one of the leading of the semiconductors. Great earnings per share growth. Had a Bible gap up on Wednesday. Read your rules on Bible gap ups. I like this stock. It's got great earnings. It's been a leader for a while. Slow uptrend. That's a weekly. It's one I'm watching. Humanetics, biotech. I just liked it because it was breaking out of this trading range on good volume. No home office furniture pullback. Volume coming in, held up pretty well on Friday in a bad market. Everything turned green, had a mobile breakout from a squeeze on Thursday. Lear, another airline component, automobile component. Metivation, a nice, powerful up move. Consolidating here, just broke above the 50. Worth watching for move off the 50. Same with Mercer International. Minerals Technology, a little bit more of a pullback than I'd like to see. A bit of a morning star pattern coming up here with a big move up here, gap up on Friday on a pocket pivot and a kahuna, and a Bible gap up. Earnings per share coming into the stock. Murphy USA is one of those refiners and marketers. Nice move here, going flat, perhaps setting up for a buy. Newmont Mining, another gold stock. Newstar we looked at. NXP, another semiconductor, I believe also a winner in the Apple component game. Pacira Pharmaceuticals, this is a stock that's had a huge run. It's got a bunch of earnings coming in this year as they got a product to market. If this was a daily stock, daily chart, I'd be all over it. Looks good on the weekly. And on the daily, I'd like to see it get back above Thursday's high. Had a bearish Harami on Friday. Pericom Semiconductor, don't know much about this, but it's got great earnings per share growth. Harami on Friday. Randgold, another gold stock. Regulus, this is an interesting stock. I get the feeling that something's going on here. On a bad day Friday, it was up over 3%, coming off of a mobile breakout from a squeeze. Everything is green. Looks to me like somebody is a potential takeout candidate, or it's got news coming in biotech. Here is a oil exploration story that's pulled back. Looks like the others, except it pays a 35% dividend. Now, the problem is the dividend is based upon today's price and the last time they wrote a check. Sometimes these big dividend payers end up cutting dividends because they can't afford them. They are making money, so it'll be interesting to see what goes on here. SIMO kind of going sideways. Doesn't look that exciting. I don't know why. Picked it. Skyworks, the big leader in semis, and they did benefit from Apple's earnings, continues in an uptrend. SM Energy, another one of these beaten down energy stories like BCEI. A.O. Smith, industrial electrical equipment, a little bit of a bull flag here, perhaps. Synaptics, a Bible gap up. Now, the problem with Synaptics is it's in a downtrend. But in the bigger picture, it's in an uptrend with a pullback to support with momentum coming in with a Bible gap up. Everything's green and great earnings. That's a Jeffrey stock. I like this stock a lot. We already looked at Tesoro. Blackstone is a asset management company. A couple reasons to like them. One is they pay a 4.7% dividend. I don't know what happened here, but they had a series of pocket pivots, volume coming into the stock, and a big move up. over the last week or so. True Blue, commercial services in a downtrend. It showed up because maybe we got some bit of a bottom action in here and a PSA reversal. Kahuna moved above the 50, mobile breakout from a squeeze. Under Armour, sort of getting close to old highs. A breakout above that line would be interesting. OBB looks strong. And then USG Group's Bear Flag is a stock that's been in a downtrend. It's got good earnings per share growth. And you can see on the weekly, sort of a basing form broke above the 50 weekly. So this looks to me like it might be a potential reversal area. Don't remember why I like this stock. Good earnings. Broke out on Thursday, pulled back just a little bit on Friday. Interesting to see where that one goes. These are some of the better charts. Whiting, we looked at it before. There weren't a lot of great charts. Celtic is another healthcare stock, lower left, upper right, clearly a leader right now. Had a tough day on Friday as well. So I've shown you some of the stocks that I found interesting. Here's that Permian Trust, and it showed up on the new weekly, while in a daily buy as well, and also neutral seasonality. I don't know how this one continues to pay its 35% dividend. If it does, it's worth a lot more than the current price. Well, on that note, I think I'm going to say goodbye. Hope you got something out of this. Have a safe week. Remember, over trading is not necessarily good trading. Could be another tough week. Looking for support and resistance. Make your buys when you think the market is turned. Be careful. Price line on the seasonality looks interesting. And have a good week. Thanks, everybody.